Good afternoon, and welcome to the NAMB webinar concerning the CFPB's proposed the Sabriva panel discussions. I'm your moderator, Don Frohmeyer, your current president. The panel members that we have on the phone here with us that will be talking about the panel and what's going on with the CFPB are John Hudson, our GA chair, Valerie Saunders from Florida, and Mike Anderson from Louisiana. Welcome, the three of you.
Thank you.
Thank you.
Thanks,
Don. One of the things we want to do in kind of talking a little bit about the Sabriva panel, as many of you know, there's been a lot that has been going on the last 2 days. There were conference calls of the people that were on the panel to kind of clarify, or I guess from a different standpoint, try to clarify exactly what was meant or intentions of that. And we're going to talk a little bit about that as we go on. Before we kind of get started here, one of the things that we want to do is we're going to put a series of questions eventually up on the website for everyone to answer. And basically what we're after is trying to get a good idea of what kind of actual people are actually on this webinar, as far as brokers, if you're an originator, if you're a banker or whatever. So Andrew, if you want to go ahead and put that first one up, and that way people can kind of go ahead and start. We'll leave it up for a couple of minutes so people can answer the question. What kind of company do you work for? If everybody could, check which one they actually, which one they belong to, so that we can get that. We'll leave that up for another minute or so. But in the meantime, let me go ahead and get John Hudson to kind of just give you a little bit of an overview of what the CFPB has done with this panel and what they've kind of asked these panel people to do. So, John, if you can go ahead and kind of give them an idea of where this kind of started and what's going on with it.
Certainly, Don. Thank you. The biggest thing what the CFPB is doing any time that they're going to propose a rule, they have to try to determine exactly how it's going to impact small business. Which, as you can imagine, 95% of us in the mortgage industry today still qualify under the Small Business Administration definition as a small business entity. So what they do is they gather up small business representatives from throughout the country. And this latest panel had 20 participants. 5 of the participants also happen to be mortgage professionals that are also supportive and members of your National Trade Association, NAMB. So we're very proud and pleased to know that 5 of the 20 participants are NAMB members and mortgage professionals. So with that, the CFPB calls them in, all 20 panelists, to spend a day to discuss the proposed rules and what the potential impacts these will have. So after that, after they spend all day up there, there will be a series of conference calls, as well as a roughly a 1 or 2 week window for each panelist to submit a paper writing down exactly how these proposed rules are going to have an impact on small business. So these 20 people are there to represent you in your industry, and they've done a very good job so far. And all of these comments will be entered into the public record to determine, exactly how these are going to impact us, small business and consumers today.
John? So sorry to interrupt, but if you can actually, it sounds like the audio quality on your phone is just a little low. If you could maybe just talk a little more direct into the phone. Sorry about that.
Sure.
Perfect. That sounds great. Thank you.
But so that's basically the bottom line of the Sabriva panel is the CFPB is bringing in small business representatives to discuss the proposed rules and regulations to decide how it's going to impact a small business to be able to operate in today's environment.
Okay. The next thing what I want to do is kind of introduce Valerie and Mike a little bit. I mean, I know Mike doesn't need any introduction, but Valerie, those of you that might not know who you are, why don't you go ahead and tell us a little bit about yourself, how long you've been, in the business and everything. And Valerie's from Florida, so Valerie, you want to just kind of give us a little update about who you are?
Sure. I am currently the immediate past president for the Florida Association of Mortgage Professionals. I've been in the mortgage business for about 20 years. I have a small mortgage broker business in Florida called RE Financial Services. I also am vice president for Title Clearinghouse of Jacksonville, which is a title insurance company. So they are affiliated businesses, so very familiar with the concept of the affiliated business flat fee and interested in that part of the discussion besides everything else that had to do with the SBREFA discussion. I've also am very heavily involved in our state association and have been for the last 15 years from all aspects, education, anything you can possibly think of, basically.
Okay. And Mike, you want to kind of give us a short and abbreviated history about you?
Yeah, 33 years in the mortgage business, run a affiliated company, part of Ladder & Bloom, former NAMB, GA Care, and officer and director, and that's it.
Okay.
Was that short enough, Don?
That was short enough. I know you can talk forever, so that's why I made the comment about being short. The as we kind of run through these slides, I'm not going to really read them to you because I think what everybody kind of wants to get through this thing is the fact that after we kind of review some of these slides, we're going to have the three, John, Mike, and Valerie, talk a little bit about what happened yesterday and today on their calls, and actually what happened when they actually appeared and discussed with the CFPB some of these topics. So if you kind of start to go through these panels just a little bit, Andrew, the next page I think is the actual definition of the small business regulatory enforcement. Yeah, there we go. And that kind of gives everybody an idea. Now we're gonna copy this and make this available on the NAMB website. So you're not gonna at this point in time really need to take any note. I mean, I'd take notes, but you're not gonna have to write all this stuff down because we'll make it available to you. Excuse me. The next page, or the next slide that we're looking at, basically is introducing points and fees into the topics so that everybody knows what they were actually asked to do. This is where some of the information came out about consumer paid compensation, broker paid compensation, and creditor paid compensation. The next slide basically shows a little bit about the Dodd-Frank Act and what it's permitting the CFPB to do. And again, we're just kind of trying to go over a little bit of what was involved in the panel that these people were actually reviewing. The next one was a proposal under construction or consideration from the CFPB. Basically, they were looking at, number one, prohibit points. 2, permit consumers to pay upfront origination fees to the creditor, provided that the origination fees are flat and thus do not vary with the size of the loan. And 3, to permit consumers to pay upfront fees to affiliates of the MLO or of the creditor, provided that such fees are flat and thus do not vary with the size of the loan. So one of the things that was really important in what the panelists were running over was the fact that they were getting information that basically the CFPB was considering the flat fee. And so I think right now is a good time for Mike and Valerie to kind of tell us a little bit about, the reaction on the panel and what the other, because there were, what, about 15 people there at the meeting, Mike?
No, there were 19 that were physically present in Washington, D.C. 2 weeks ago. And I will tell you, the meeting lasted all day from 7:30 for the breakfast till 5 o'clock, ended promptly at 5. And I know Valerie will concur with me. There was quite a bit of confusion. I know you have read about it in the blogs and in some of the National Mortgage print, and there was confusion. And I don't want to criticize the CFPB. I do want to compliment them for reaching out to the small business community, because we are, like you said, Don, we are all small business. But there was much confusion. The good news was Dr. Winslow Sargent was present at the meeting, and so was Jennifer Smith, who's the director there for the Small Business Administration and for the Office of the Advocacy, which was good. She has been a good friend to the mortgage broker and to the small business community. There were a lot of questions. We didn't have enough time to answer all the questions or get all the questions in. But the confusion has been, is a consumer paid, is a lender paid? We really didn't get a clear definition on that meeting 2 weeks ago. Because of that, I will tell you there was a letter that Roy Deloach with NAMB did draft and send to Jennifer Smith, that we had a lot of unanswered questions, and I believe that other people, other groups that were there did put in the same request, and that resulted in that conversation yesterday, a conference call. And I think that, Valerie, I know I'll let you talk here in a second too. There was even more confusion after that. We really couldn't get the questions answered. I asked specifically a question, are they going to target the real estate agent commission, okay, on a affiliated transaction? The answer, and I said point blank, I said I'd really appreciate just a yes or no answer, and they said, okay, the answer is yes. Then they kind of double-tracked, and their exact wording was, well, we're not going to make that the agent's not going to be our primary focus, the real estate agent. So, in other words, guys, I think we all need to be concerned, but I think what we got out of the conversation this afternoon was that it is going to be geared towards consumer paid. And I'll just say one last thing to let Valerie talk. And I think that we all need to be extremely concerned. I think we all need to be ready to do battle, because this will just be a stepping stone into the next plateau. If it's allowed on a consumer paid on a flat fee, what happens if we still do operate business as usual on a lender paid? It's the $400,000 loan, we're going to end up doing lender paid, and are they going to accuse us of steering? So, Valerie, I'll let you kind of pitch in from here.
Sure.
Thank you, Don.
Yeah, as Mike talked about the panel, I don't know what his perceptions were when he was going there, but I've participated on working groups with CSBS and ARMOR and NMLS, and I've also done a lot of workshops with various state legislatures for our state lending laws and things of that nature. So I was expecting it to be sort of a dialogue and a conversation, and we ask questions and they give answers. And I think the number one thing that I took away from is that that's not what it was. It was them posing questions, them wanting us to provide them answers, but there really was no feedback back to sort of gauge where they're going with this. I know some people walked away from the meetings of, well, what these current proposed rules are that they're giving us is exactly what the proposal is going to be. They did say on today's conference call that that is not necessarily the case, and they sort of assured us that they are taking the feedback that they're getting from the people who are participating in the panel to potentially modify the proposed rules that they had, the 37-page document that came out a couple weeks ago. But I know, like Mike said, that I would say the two number one topics or co-topics were the flat fee and the affiliate flat fee. And even the conference calls that we did, we had a conference call yesterday that went for an hour. We had another one today that went for an hour. And we really we're all, and they were too, wanting us to hone in on our concerns regarding the flat fee. And there was some confusion because they're using their terminology, and we're sort of using industry terminology and trying to fit those round pegs and square holes to figure out how this pertains and corresponds to the way that you do business. Presented a challenge, I think, for everybody that was on the panel, because we're sort of expecting them to respond back to us in a manner that we can sort of understand how it corresponds to day-to-day life, and I don't think we really got that. I think they did the best they could, and I do, applaud them for that. But like Mike said regarding the affiliate flat fees, they are, I think, really honing in on that, and sort of looking at what are the different types of affiliates that you can have with a mortgage company or an MLO. Well, there's not too many. Appraisers, their fees are pretty much flat already. Tax service flood cert, those are flat. They don't usually vary with the size of the loan. So to me, it almost does appear that they are sort of honing in on real estate companies, because, and potentially appraisers, but appraisers, their fees don't usually vary that much, and it definitely don't vary depending on the size of the loan. Maybe the structure of the house, there's some sort of variance, but I still feel that, number one, they're probably looking to see if they have authority to regulate realtors through Dodd-Frank and through the other various federal lending laws that they oversee. And if they do, I think, in their mind, yes, realtors are included. Within the paperwork that we were given, they did establish a definition of affiliate, and it referred back to the Bank Holding Act of 1956. And so I looked at that definition in the Bank Holding Act, and basically what it says is if you have common control or common ownership, you're an affiliate. Well, there's lots of mortgage companies out there who have common control or common ownership with real estate companies. So I thought that was a huge takeaway from this, that they're sort of really looking at every aspect. The other thing on the screen now, it shows that payments for title insurance to affiliates are permitted to vary, and being that I have a mortgage company and a title company that does have common ownership, and we are definitely affiliated, although my company does very little business with my mortgage company. It is only for those individual transactions where the mortgage company and the title company are doing business on the same individual transaction. But I specifically wanted them to say, and they did confirm, that on the GFE and on the HUD-1, the title services and lender's title insurance line that is there on the good faith estimate and on the HUD-1, that dollar amount can vary, because I know that there are fees that roll up into that are bundled together, like settlement services and title searches and things of that nature. So that was a good indicator of, yes, that particular line, it can vary regardless of loan size.
This is John Hudson. So Mike, Valerie, walk me through this in the CFPB's eyes from what you gather from your conversations with them on the SBREFA panel. How exactly would this flat fee work? If I'm a consumer and I want to go buy a house today, and I go to either one of your respective mortgage companies, but I wanted to do a consumer-paid transaction, how would this work?
You want me to take that, Valerie?
Yeah, please.
John, they really couldn't answer. We did ask the question, who's going to set the flat fee? Is the CFPB going to come up with this flat fee? And they said, no, they will not come up with a flat fee. What they kind of answered for us, John, and unfortunately, Valerie, I know you'll agree, I still think we got off this call, unless it's just me, I'm not all there maybe, but I still don't have clear, definite answers. They did say towards the end of the call today, look, guys, we're not saying exactly how we're going to do this, but we really need your input, okay? Give us suggestions. We would love to hear your suggestions on an alternative. So they did make that point clear, But from what we've gathered, John, is that the origination charges, whatever that on the consumer paid, would be a flat dollar amount. How do we calculate that flat dollar amount? We really couldn't get answers, unless you heard an answer, Valerie. Did you hear an answer on how it's calculated?
No, no. I mean, I pretty much gave them a complete scenario of I was trying to correspond it to the what we call lender paid now, where you have like a 2% flat comp on every single transaction, regardless of terms or loan amount. And to say, okay, so, because one thing they did bring up is that the flat fee could vary based on characteristics of the loan. And so, you know, a lot of people on the call were really honing in on that, trying to figure out what the characteristics were, and are they going to give a definition of characteristics? Is it geographic? You know, is it if it's a government loan, if it's a prime loan, or whatever the case may be? And they really didn't have any answers. But regarding the consumer or brokerage paid at flat fee, they wouldn't come out and say, okay, if I'm going to charge $1,500 as my flat fee on every consumer and brokerage paid transaction, but that can vary based off of these characteristics, whatever they may be. They wouldn't even answer that and say, yes, that's what we're going to do.
But
they just said this was great feedback. So.
But yet is loan amount a characteristic of a loan?
No, you can't. Yeah, it's characteristic, John, but that
would be the only thing that would be exempt from being a characteristic.
One thing that we did point out, John, one of the questions we did ask today, I asked specifically today, where do they come up with the authority to make this change? Specifically, I pointed out that in Dodd-Frank itself, that compensation cannot be based on the term, interest rate, or the type of loan. They did acknowledge that, yes, they do know that does state that in Dodd-Frank, but they did acknowledge that Congress has given them the authority to implement something like this based on a flat fee.
You know, one of the things they did say was that Congress was worried about the clarity of pricing structures, and so that's why they are coming up with this flat fee concept.
Let me ask you guys this: did the CFPB say what is the rush? What is the hurry? Why are they coming out with this flat fee proposal now, when they're not even done figuring out qualified mortgage or the Respatilla combination or QRM or anything else? Why is this all of a sudden a priority for them?
Well, what they did say on the call was in statute, if they do not do some sort of an exemption or a modification of the current structure, that on January 21st, 2013, the charging of origination points, discount points, or other origination fees would no longer be permitted. So they said that's why the proposal has to be done by July of this year to allow for the 90-day comment period and then the 90 days for review to come out with the final rule. And it needs to come out prior to January 21, 2013, or else those provisions will kick in.
Well, that's a pretty big deal. So every loan after that would be a no-cost loan. I mean, that would impact mortgage bankers, depositories, and mortgage brokers.
Definitely.
Definitely. Okay. Kind of. Yeah, I want to kind of get through some of these panels that we're looking at here. But what I'd like to do right now is just to make sure everybody realizes there's a place on your webinar where you can ask a question. So if you want to type in a question, Andrew will get those questions and he can pass them on to us, and we can answer some of your questions. Andrew, if you want to kind of just run through the sheets here just a little bit, we can move on to the next couple of them, because these are just things, and these will be available to everybody on the NAMB website. but and actually this one right here. These are some of the questions that were brought up and were kind of put to the panelists about the affiliated entities, support your business, what services do they provide, how are they currently compensated. They were asking a lot of these questions. So, you know, the CFPB was asking a lot of questions of not only of mortgage brokers, but also about how some of the stuff that that you do to do your job, you know, day in and day out was being affected. And so that's what some of these things were. Go ahead and continue on.
Hey, Don, can I say something real quick?
Sure, go ahead.
I will tell everybody that's listening to this, in the 2 weeks ago and on the call today and yesterday, it wasn't just mortgage brokers in that panel. We had nonprofit, we had community banks, we had mortgage bankers, and we had banks and credit unions. And it was unanimous. 100% of the people in the room and on the telephone call were dead set against a flat fee. On our call this afternoon, we had a bank out of Florida, I believe it was Florida. She had recommended, in fact, I recommended the same thing 2 weeks ago. Before you go forward with anything like this, we welcome you to come sit in a mortgage brokerage firm, sit in a mortgage banker's firm, sit in a bank or a credit union's firm, sit with the loan officer, sit with the processor. See what we go through before you come up with such nonsense. And it was highly recommended, and they said they really appreciate it. Of course, we know they're not going to take anybody up on that. But it is good to know, guys. I mean, the good news is it's not just the mortgage broker that is being attacked here. It is all origination channels, and it was nice to see united front that every single person on that call was dead set against it. So thanks, Don.
Yeah, again, if you kind of read between the lines, you'll see it's not just mortgage brokers. It literally is everybody. So anyway, continue to go through these panels, Andrew.
This particular one, that one you just had up about the brokerage paid, the one that was, one prior to this, but you know, I think the thing is to keep them are you going to go over the consumer paid, broker paid, creditor paid here?
Yeah, I'm gonna let you guys do that here in just a second.
Okay, all right. I'll keep my thoughts to myself.
I think the webinar is kind of. It's the next one down, Andrew.
There's just a little delay. That's the one you're looking for?
No, actually, I was looking for the one that had the 3 types on there. It might be farther in. But again, you know, we'll have all of these panels that have all this stuff on them available to everybody. Again, on the website, so that you can go back and look through them. Right now, I guess the kind of the best thing to ask is, Andrew, do you have some questions that might be directed towards Mike or John or Valerie?
Yep, we've got a lot of questions that are coming in right now. Let's start by going to the top here. Okay, so what is the NBA and NAR's position on this problem?
I think NAR's concerned. I think all trade groups are concerned. I haven't spoken to him. John Hudson, you can probably. Well, let me take that back. I know I've made them aware of it. I've communicated things with NAR. I've communicated with Respro and the Realty Alliance.
I do know that the MBA is convening a task force to look into this and explore exactly what the ramifications will be, but they have not come out with any sort of public comment just yet.
They were at the SBREFA panel, so I did see them there. So
I can tell you that the NBA president, Dave Stevens, is concerned that the ultimate effect of a lot of the proposed rules and regulations that are being tossed around right now, if they're not carefully crafted, will have severe unintended consequences on consumers and small business in this country.
Right. Well, and this kind of goes to one of the next questions here. Why does the CFPB, I think this is so important for consumers? It seems like overkill.
I absolutely agree with that. A lot of it does appear to be overkill. Unfortunately, though, the CFPB is required under statute in Dodd-Frank to come out with some sort of solution. So, the people that wrote and passed Dodd-Frank didn't quite realize exactly what. Well, I'll come out and say it. They didn't quite realize what the impact of this rule would have on mortgage origination and consumers today. So, on one side of the spectrum, the CFPB is trying to fix a problem, but on the other side of that spectrum, the CFPB is still having a very hard time understanding exactly how this industry works in order to fix the problem. So it's what comes first, cart before the horse. Absolutely, some of these things are overkill, but they're trying to help. So take it whichever way that you will. At the end of the day, though, what people need to realize is that there's a lot of stuff in Dodd-Frank that it does not make sense, that will have severe unintended consequences, and really the only way to help combat some of these things, once they take effect, is to really get involved, support any trade association that you can support, whether it's NAMB, MBA, NAR, NAHB. Support your trade associations, get involved in the political process, and get involved. At the end of the day, just get involved. Consider your trade associations as somewhat of an insurance policy for your business. I can tell you the reason why the Mike and Valerie and the others, took time out of volunteered and took time out of their busy lives, and the reason why everyone that works with NAMB is volunteer, is because we all have a vested interest in making sure that, damn it, whether you're a member or a non-member, we're there to keep you in business and still be able to offer consumers choice and protection. So get involved and participate. Sorry, I kind of went off on a little soapbox there.
It's important. I think I think that's something that needs to be said. There are a lot of people on this call, and fortunately, there are a lot of them that are members of the NAMB and the various other trade groups. But you and I both know that there's not enough. That we don't have enough support out there. But this next question, now that we're still in the CFPB, someone asked, can and will a lawsuit or injunction be filed against the CFPB?
Mike can probably talk a little bit more on this too. Yes, at the end of the day, yes, you could try and do your best to tie this up in court. But Mike, do you want to touch on what it was like suing the federal government last year?
Yeah, it was difficult. I think that if everybody remembers, we basically all won. The judge basically saw our side of it, but in the betterment of society, they sided with the Fed. Do we want to go down this road? Is it possible? I'm sure it is. I'm not a lawyer. That's something that NAMB would have to discuss, whether they want to go down that road. So I really can't give an opinion. I will just tell you it's a very difficult and a very expensive proposition. Don Fromeyer, you were involved last year, and it was
it's a lot of money.
A lot of money and a lot of work, and there's no guarantees of the outcome. So, I just think that as an industry, we really, really need to pull together. I did pose the question this afternoon. I said, guys, I'm going to give you some Louisiana straight talk. Why? Why on earth are you doing this? Have you been getting a slew of complaints? about compensation or your complaints about the good faith estimate. I did recommend, why don't you guys fix the good faith estimate, try that out, and go ahead and delay this. You've got the power, postpone this. But then there goes the question, well, then come July, whatever the date is, then it's going to be illegal to charge a buyer points or origination fees per Dodd-Frank. So, you know, I'm not sure if lawsuit's the answer. So, might be.
Now, one of the attendees asked, you know, who from the CFPB was on the SBP?
We had Mr. Honig, Ms. Cochran. That was it.
Did the CFPB acknowledge that a flat fee could hurt customers requesting a smaller loan amount?
They were made aware by the people that were in the room that proposing a flat fee regardless of loan amount would almost create a predatory lending scenario for the lower loan amount borrower compared to the higher loan amount borrower. So they were made, you know, people voiced their opinions regarding it, and they did allude to the fact on the call yesterday and today that they are taking that into consideration.
So has anyone asked the CFPB why they feel they need to mandate compensation, and do they have any data to support their position?
Mike actually today asked the question if they had reviewed any studies or were doing any studies regarding the LO comp structure that's in place now, and they said no. All the studies that they looked at or had access to predated LO comp. So no, they do not have any studies. But you know, the situation is still the same. Why are they doing it? Because we basically have a ticking time bomb situation in Dodd-Frank that something has to happen by January 21 of 2013, or the ability to charge origination points, fees, and discount points is going to go away.
Right. So, hold on for a second. Just go into another question here. So, if the CFPB is going after realtor commissions, I believe it is now time to work again with NAR. Only NAR could help defeat this. I'm going to censor the word that he used there.
You know, I can tell you that we do at NAMB now have a much better relationship with the other trade associations. I think if there's anything that's good out of all this proposed regulation and that's coming out of the Dodd-Frank Act, if there's anything good about it, it's actually created a unified front. I can't remember the last time in the last 15 years that I've been in the mortgage business that you literally have the mortgage bankers, mortgage brokers, the home builders, the realtors, ResPro, Realty Alliance, all the major trade groups literally on the same page. So, you know, if back to the question, will, you know, if they're coming after realtor commissions, will NAR get this killed? Yes and no. I mean, they will definitely be able to help with influence, but you've got to remember that this is the Consumer Financial Protection Bureau. And since the director, Richard Cordray, was appointed, they became a lot more powerful with a lot less oversight. And so really the way to tackle these is going to be through the legislative process. So it's not necessarily going to be from lobbying the CFPB per se. It's going to have to come out of legislation.
Got it. How does this affect correspondent lenders? Will service release premium be affected?
Service release premiums, the question was, will correspondent lending be impacted by this flat fee proposal? And I would say not from the outset, however, unless you're charging processing fees under origination fees. That's where it's going to get tricky and complicated. So from the outset, are you still, as a correspondent lender, going to be able to make a service release premium? Sure, but it's going to completely change the way that you structure your business model. Because if you set up a model where you have to charge, you're charging an origination up front and then lower interest rates on the back, well, take away your ability to charge anything up front unless you're doing a consumer paid transaction, in which case now you're rolled into this flat fee mess. So absolutely, ultimately you will be impacted.
And you know what? Let me chime in too. Guys, I will tell you that for those of us that attended this meeting and who were on the phone call, there isn't anybody of the 19 or 20 of us that can give you a real answer. And I hate to say that. We can guess, we can speculate, but until we see the actual proposal, because, I'm sorry, Valerie, I know you'll agree with me, we still did not get clear, precise answers. I don't think we did. In my opinion, I don't believe we did. But I will tell you, when that proposal comes out, every single one of us in this industry, if we don't all respond to this and just pour that place, just load them up with comments, shame on us. Every single one of us had better just flood that department with comment letters. I'm just going to tell you, it's going to be extremely important, because I'm afraid what the end result's going to be. I don't want to be an alarmist here, but I don't know what the end result's going to be. So Valerie, I don't know if you agree, or Don, you agree or not. But
no, I definitely agree, and I don't think that this panel ever had the intent. This panel was ever created to provide answers to the industry. It was more solely for them to sit there and throw things out of what they might be doing and to see what the response back that they would get. I don't think that that the intention of any point, whether the conference calls or the panel, was to have dialogue and conversation. So, and I 100% agree. I mean, we saw it work back in 2003 when they first, did the original RESPA proposals of bundling and everything else, and they got all of those comments, and they were able to get it, stopped at that point. Of course, we wound up having the same thing a few years later, but yeah, definitely now is the time to not sit back and just wait and see what happens, because it will 100% affect every segment of the lending industry. It is not going to, this is not a mortgage company versus bank scenario. It's definitely going to touch every aspect.
Let me kind of interject something here, and I think this is a good time to do it. Some of these things that we have up about the panels that we have on the webinar here, a lot of them have to deal with, and you kind of can go through them, Andrew, have to deal with things like pricing concessions and some loan officer qualifications for the banks and everything. In reality, from what I'm gathering and talking to all of you, I'm kind of getting to the point where the thing that is the biggest problem in reality is the flat fee. And I know that's a main part of it, but there's some other ideas that they had thrown at you guys, about, loan officer qualifications and that type of stuff for the banks, because those people, they are to eventually be included into being licensed, and the questions, it seemed like those kind of gotten lost in what was the discussion, because everything I've heard so far about yesterday's conference call and this conference call today basically had to do with the flat fee scenario. So if you guys could kind of just touch a little bit on that before we go back to some questions, so that people...
Now, if you wouldn't mind, because I have a lot of people asking this question, and I don't mean to interrupt you, but
no,
this
go
is
right
an
ahead.
important thing, and it's interesting. I'm seeing brokers and bankers that are asking the same question. What could they do today to support the efforts that you guys are trying to do? So, I mean, this is like has got to be at least a dozen questions, and half of them are for brokers, half of them are from bankers. What can they do today to support the efforts? And by the way, Bill Kidwell corrected me. It's not non-members; it's future members.
I really like that. Thank you, Bill. I like that. Future members. Well, and that's going to be the key to helping with this. I can tell you that right now, and I don't want to pick on anyone, but there's enough people that work in this industry that do not or have not paid attention to exactly what's taking place. I mean, I know that we all get busy. We all get guilty of it. I'm a wholesale rep. A lot of my brokers and loan officers too, that they're not quite members, and it's not because they don't care. It's just because they don't feel that they have the time. And so I tell people constantly, if I can have your time, fantastic. If not, can I have some of your money? Preferably both, but I'll take one or the other. To support your trade association is what I consider beyond inexpensive, considering the ramifications of what you face for not belonging. The only way to really get invited to the party, so to speak, in Washington, D.C., is to be involved politically, and whether that means supporting any trade association's political action committee, or simply just being a number that we can use when we're talking to legislators and regulators. I mean, shoot, there's over 115,000 licensed loan originators. So that doesn't even include the LOs that work for a depository. That doesn't include processors or underwriters or anyone else. It really boils down to, at the end of the day, a numbers game. And what has made the NAR and the Realtors Association so powerful? Why? Because every one of them are a member of their association, whether they're a secretary in the office or whether they're a top producer. So, I mean, not to just sound like the shameless plug for NAMB, but that's at the end of the day what it boils down to is numbers and money. I mean, I hate saying that, but that's the way it works today in the legislative world that we have here in this country. So support your trade association and get involved. When we do calls to action, it takes 5 minutes to pick up the phone and do your call your congressman. It takes 5 minutes to click on a link and submit your public comments back to the Federal Register. 5 minutes. And whether it's a 2-sentence thing just saying, hey, I don't like this because this is going to hurt consumers because X, or it's a 4-page diatribe, it doesn't matter, but your involvement does. So get involved. Sorry. And members and non-members.
Right, and the other thing about this, so that everybody realizes, everybody and we talk about NAMB all the time, but nobody on the NAMB board receives any money. We are 100% all volunteer. We don't have staff. We have basically somebody that collects our membership dues, but for the most part, everything that I do, everything that John does, everything that the board does, we don't get compensated for. So. And I, honestly, I work 40 hours a week on NAMB and about 30 hours a week on my business. And, it's all about protecting our right. I mean, it doesn't cost that much to be a member. You can be a platinum member for $120, or you can be just a regular loan originator for $50. I mean, it doesn't cost that much to belong. And when we go to the Hill and we tell them that we have 5,100 members, they kind of look at us, because I've told the story before. The pig farmers have 18,000 members. We have 5,100. It kind of makes it, you wonder. But the only way we're going to make this work is if everybody joins together, one way or another. Now, if you're a member, if you're a member of the NBA, thank you very much. If you're a member of NAR, thank you very much. You got to be a member of your association one way or another, and so that it's just that important. And at the end of the webinar here, there's a thing where you can go on and show where you need to go join. It's basically NAMB.org. You can go on and join anytime you want. We're getting to the point where we have about 10 minutes to go, and I want to kind of get through a little bit of yesterday's conference call. If you can see on the webinar right now, those are some of the items that were talked about You can go to the next one, Andrew. They were talking about flat fee. Dodd-Frank eliminates discount points on lender paid. And the CFPB is proposing allowing discount points as an exception, and we really need to support that. That's one of the items that I think yesterday that came out. The CFPB does acknowledge that there's a problem. They do want to correct it in some way, shape, or form, but in reality, I don't think they've come up with the exact answer. I think Valerie hit it right on the nose. They wanted to see what kind of reaction they were going to get from the proposal, and I don't think they were ready for what they got. Just from what I'm gathering, there was a lot of opinions that were out there. A lot of people were talking from the heart. A lot of people were giving good examples of why this won't work and why that won't work. So I think they got a little bit more than what they probably were expecting, but I think in the long run, we're only going to make this work if we all get together. So I mean, that's kind of where it was. Andrew, you got any more questions that you've had some duplicates or some important questions that we can answer in these last 10 minutes?
Sure. Okay. So hold on for a sec. Is NAMB going to engage Barney Frank to see if we can get him to weigh in on how we did with Bernanke on the LO comp rule?
I can tell you that we do have a pretty decent working relationship with Congressman Frank's office, and we have been successful in getting the congressman to write a couple letters to help us. I mean, for example, he dropped HR 4076, which would have opened up the door for LOs to be able to compete and lower compensation in order to give a consumer a better deal. However, at the end of the day, though, it goes back to with the CFPB. Now that this bureau has already been created, it's really only going to be going in there and legislatively changing Dodd-Frank in order to make these corrections. So, and unfortunately, I can say that in this election cycle, it would be very easy to get the House to pass something. It would be very difficult to get the Senate to. I mean, both houses are so divisive right now. We're not going to be able to get a whole lot done legislatively until after the November election, which just brings up another quick point, is that when it does come to the November election, despite what you think about people's personal politics or ideas, people need to find out about their candidates in their districts and find out which ones are going to be supportive and a little bit more friendly to you as a small business mortgage professional than anyone else.
Okay, so I'll go on with some of these other questions. Can you please send us the committee involved in making all the flat fee so we could send them our concerns? So I guess someone's looking to know the committee that's involved in making these decisions so they could send them their concerns.
I don't think you can do that.
Yeah,
well, unfortunately, we really
can't do that until it comes out for comment.
Yeah, I mean, when it comes out for public comment is when everyone will get the opportunity to chime in and weigh their thoughts. Right now, I mean, these Sabrifa panel meetings, it's not necessarily that they're secret, but these are panels that are a little bit more intimate and open for discussion, and we just need to keep that the status quo for right now. But when it opens up for public comments, they do read every single public comment that comes out, and so that's when you'll be able to weigh in your final thoughts.
Okay.
I will say, oh, go ahead.
No, go right ahead, Mike.
All right. That doesn't stop anybody from listening to this to chime in and write and call your congressman or write to the CFPB and say, hey, we hear your we hear and we're reading in publications that you're going to be proposing a flat fee. If you want to absolutely shoot them a letter, you can, but you can't address any particular individual. You just want to send it to Richard Cordray himself. You know, have at it. Feel free. I think the more people that chime in, leave us alone, for crying out loud. Things are picking up. You know, things are going well. Why are you doing this? Feel free to chime in on that. I would think. Doesn't hurt.
I agree with that.
Yeah.
So, and there's a question that's an interesting one regarding CFPB's coverage. I mean, is the CFPB going to start to go and look at insurance compensation? Are there other areas that they're going to start addressing as far as compensation?
Mike, Valerie, you want to chime in on that? I think from what I understand from your meetings and discussions, they're kind of opening that door.
I kind of think so, too. I think that the real estate industry had better be worried. You know, who knows where it's going to go from here. I will tell you, 2 years ago, when I was part of NAMB there, we attended a meeting at the Federal Reserve Board, and I was at that meeting, and Roy Deloach was with me, and somebody in the group jokingly said to the Fed, oh, I suppose you're going to go look at car dealerships next. And they said, as a matter of fact, we are considering looking at automobile financing as well. So nothing's off the table. Anything to have to do with consumer financing, you know, I mean, they didn't come out and say it, but, I mean, nothing's off the table.
Yeah, I agree. I mean, you just have to think about every single facet of your financial life that they touch, from credit cards to auto industry. I mean, it's everything. So, you know, I mean, I don't know if they think that it's simpler for a consumer if they only see one fee, they never see any different fee, and that's it. Well, if they're going to start here, then it'll just filter down and move to every single thing else. And then any sort of ability to choose providers one over another, I mean, it's almost as if we'll all just be, you know, it's just Big Brother watching over you, making every decision for you, so that you don't have the burden of trying to make it yourself.
So basically, take the free market out.
Well,
or dumb it down to the lowest common denominator.
Cheerio.
There we go. All right. Now, just there still is a ton more questions, but Donna, I know you like to end these things on time, so we don't go over the 60 minutes that we ask people to be on the call. So I just want to know if you want to wrap it up, or yeah, and maybe people can email you questions directly if they still have things they want to ask you.
Yeah, actually, if you want to send it to governmentaffairs@namb.org, John and I will be getting those emails, and we can get back and answer these things for everybody. That's probably the best way to do it. You know, I've been watching the attendee list, and you know, the fact that we had, you know, way over 720 people on the call. I really do appreciate it. The fact that it's important and everybody cares and have gotten on the phone for this thing is really important. So we're going to try and continue to do some of these things and have these webinars for people so that they can understand what's going on. As we find out exactly what's going on and what we can do about it, you know, we're going to put all that stuff on our website. It'll be on the front page of the website. John or myself will put it on there. So, I do appreciate Mike, you taking time out of your busy day. I know you've been real busy, and you too, Valerie. And appreciate you guys giving the hour to inform these people of what's going on with this. This is probably one of the most important things we've ever gone through. You know, we've all kind of gone through these things over the number of years, but I think this time this is one of those things that it should be a wake-up call to all of us, that we really need to band together and get together because this is our livelihood. And you know, I kind of feel like if we don't do it the right way and go after this and make everybody know that this is the wrong thing to do, we're all going to be out of the broker business. We're all going to be out of the mortgage business. The only ones that are going to be able to do it is going to be the mortgage banks, so, or the depository banks. So, again, I appreciate everybody being on the call. Please, if you have any questions, contact us at governmentaffairs@namb.org, and then the next thing is, please go join and become a member, and let's do this as a group. So, with that, Andrew, I think this kind of ends our webinar, and if I can kind of get you to give me a call later so we can talk about some of these questions, maybe I can get them from you and answer them for them. Okay, and John, I appreciate everything you've done as government affairs. So you've done a great job. So I think with that, we'll end the webinar.
All right.
Thanks a lot, Don. Thanks a lot, Andrew, Mike, Valerie. I appreciate it. And also for all of you members and future members out there, thank you for your support and taking the time, and we appreciate it.
All right, guys. Take care.
Thank you.